This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
All right. Hey, welcome, and you're listening to Daily Market Wisdom with Master Trader Nick Santiago. Today is April 29th, and this is show number 24. Well, we've already exceeded all the odds. We're still doing this 4 weeks later, Nick. But, hey, we got gloomy news on the GDP front. What a shock, huh?
What a shock. We talked a little bit about it yesterday. I said don't expect any good numbers. But that is already baked into the cake. The market was expecting it. It was actually even a little bit worse than expected. But again, that's in the past. That's a rearview mirror stuff. You got to be always looking forward in the stock market, and you got to let the markets tell you what to do. And really, that's why I use charts, because if somebody's at home and they see that GDP number, what are they doing right now? They want to jump out of a window. So again, and you look at the stock market today and you have the Dow up 450 points. So, you got to look at the charts. You got to pay attention to the technicals. You got to do what the charts tell you to do. And again, that's what I've been doing. Yeah.
So up 450 points. And then we see also oil is surging today.
Yeah, you got a great pop today in oil. And again, like we were on, just a couple of days ago when the U.S. When oil was falling, I said, USO is rolled out of the June contract. They're going into forward contracts. And, this is going to probably causing a little bit of a hiccup in oil. But ultimately, if you get the economy starting to go and you get these states starting to open up, you have no choice but to use oil. We're gonna start burning through those reserves. Now, we have plenty of them. There's plenty of boats out there full with oil that are just sitting there anchored. But you start to get this economy going again, and people start moving around, start driving, start traveling. Florida's about to open up here. I know Georgia has already opened up. Things will start slow, but the market looks forward. It's not looking backward in the rearview mirror, and the market saying, hey, oil needs to move up. We're going to get things rolling here. And you also have, European countries starting to open up as well.
Yeah, European countries opening up. So what happened here to USO? It looks like it's trading at 1767.
Yeah, they did a reverse split.
Oh, they did a reverse split
to make it look more attractive, but it really doesn't affect the value of the product itself. So it's just a reverse split. I think
10
they might have
1.
done it. 10 for 1 or something along those lines. I'm not exactly sure what the math behind it was.
Yeah. Okay. Well, yeah, that makes a lot of sense because they didn't adjust the charts yet on Yahoo, so it looked a little anomalous.
I think it was 8 for 1. I think it was 8 for 1.
Okay. Yeah, it was a 2 something. That's right. All right. So, hey, we had positive drug news from Gilead on the drug they're testing for COVID-19.
Yeah, it looks like they had really positive news. This stock has been like a seesaw lately because a couple of days ago, in fact, last week, there was a leaked WHO report, WHO, the World Health Organization, leaked something out of China saying that, the drug had no effect. And later on, Gilead disputed it and said, hey, we got our test coming out at the end of the month. The study out of China was not a complete study. And the stock tanked on the news. In fact, the stock market tanked that day on the news. And again, it was an incomplete study. They didn't even have enough candidates to do the study. So it just goes to show you the funny business that goes on with the World Health Organization and all these, so-called places that are supposed to be helping us. And here Gilead comes out with terrific news. And we had great news on this drug a while back. But it looks like this could be, helpful going forward. I don't want to say it's a game changer, but it might be. We don't know. We've got lots of different compounds coming out or being released soon to help with treatment of COVID-19. Not necessarily is it a cure, but I'll be honest, I don't want a vaccine anyway. So I like the theory that, you could take a couple tablets and relieve the symptoms.
Absolutely. Better to have, there's so much anti-vaccine sentiment out there in the public, rightfully so. We've seen, look, polio vaccine given in the 50s, A lot of it found to cause cancer in women. And that's just one example. We know there's a lot of issues there. I'm not disparaging vaccines. I mean, look, getting rid of measles, German measles, and all these other things, but giving somebody 35 vaccinations, a kid 35 vaccinations at once, doesn't seem to be like the right way to go about it. Maybe they should be spread out more. I don't have the answers. I'm not saying that they cause more harm than they solve, but I think maybe they've done things to raise the risks. So earnings pouring in. We got Google. Google was better than expected.
Well, they came out and the ad revenue was down. I don't even really pay much attention to that stuff, but I'll say this much. The stock's up $108 today. It's up 9%. So it's a tremendous pop for Google. Whether you love the company, hate the company, we're traders here, right? So when we want to look at a stock, we have to say, hey, that stock's reacting pretty well to the market. So the reaction is really everything. Nobody's going to report great earnings this quarter in general, just because of the COVID-19 scenario. But you have to watch the reactions in the markets. I personally don't like to trade in front of the earnings. I like to trade afterwards, especially if the stock is down and I know the overall underlying trend is up, then I would be a buyer. Tonight we have Facebook reporting earnings. We have Microsoft and Qualcomm. So that's another big night for technology. So again, we'll see what this market does tomorrow. But today, market's looking pretty strong overall.
Interesting. Just when you think it can't go any higher, it does it. So what else are we looking at here? What about our metals trades here? They've kind of fallen. Looks like we're in a real consolidation phase here, doesn't it?
Yeah, and that's exactly what you want to see. I mean, if you take a look at, spot gold today, we have spot gold down $7. If you take a look at the GLD, that's down 67 cents. You take a look at GDX, which is gold miners, that's down 27 cents. But really, you don't want to see these things go parabolic to the moon, because that would be the end of the run. You want to see them make moves up, test levels, consolidate, pull back. That's healthy. That's good for the metals. That's good for the precious metals. And in fact, today we even have silver up a little bit by about 1.1%, up 17 cents on spot to 15.5. I own the SLV, as you guys know, and so far, that's working out nicely. Also on the program, just when I got into my I think it was on the 15th, I got into XLF. I mean, we're up, over 7% on that position now. So it's been a really, really good trading market. But going back to the precious metals, they're holding up really, really well. We don't want to see them go up right now. They should consolidate. That's healthy, and that will give you higher price down the road.
Yeah, and we're seeing a little divergence between gold and silver. What does that tell, from a technical standpoint, tell traders?
Well, remember what I was saying when I got into the SLV trade. I said, silver has a lot of industrial uses, and if the economy gets going again, we're going to need to use silver again, not just as a precious metal, but it's going to have uses in a lot of different areas. So that's what it's telling me things are starting to pick up. We're starting to get going again, and that's a really, really good sign. It's very, very encouraging to see.
Yeah. And so what about our airline and hotel stocks? The buy signal hasn't flashed yet?
Yeah, the buy signal's there. The problem is they all have earnings coming up. So,
right.
I kind of just like to wait until the earnings are done. But all the hotels are up today. You have Hilton up 5%. Choice Hotels is up 4%. Hyatt is up 6%. I mean, so they're all doing really, really well. But they have earnings this week. So and more earnings coming out in early May on a few other hotel names. But I'm compiling my list, and I'm just waiting for those earnings to pass, and I will be getting involved in those names.
Interesting. So earnings, like you say, stay away when the earnings reports come out, because it's unpredictable. And when they're taking write-offs, they'll take everything but the kitchen sink and totally decimate the stock, because they want to take the hit, because they know they've written off everything possible. And then in later quarters, when it comes back, it'll come back that much stronger, because they got everything off the books.
That's exactly right.
Yeah. So talking to a friend of mine in real estate, he was telling me, interestingly enough, that in the Northeast, residential real estate really hasn't been that effective. He said his default rate, and he owns many units, is less than 10%, which is way higher than normal, but it's not end of the world type numbers. But hotels and commercial real estate, retail, has really taken the hit, and there's just going to be tons of foreclosures there because in those cases, there's no moratorium on foreclosing on hotels and on commercial real estate. So anything in the REITs that's telling us something that the market isn't?
Well, we talked a little bit about it last week, and I talked about the iShares U.S. Real Estate ETF, which is the IYR, and that really holds a lot of these mall owners and big buildings and companies like that. And that's really what I track, and I still have that going higher. So I don't really see anything terrible there. Now, it's not going to scream to levels, but the IYR is trading around $76.85 at the moment. I see it going back up to 85. So I do think there's more upside to go for commercial real estate. Now, when you talk about REITs, there's so many different REITs, right? So there's apartment rental REITs, there's commercial real estate REITs, there's nursing home REITs. I mean, it's so diverse. So you really got to dig into those charts to really, and be specific because it's such a diverse group when you think about the real estate investment trusts.
Yeah. So, but just as an aside, so what you were saying about, bankruptcy, when you start seeing bankruptcies in industries, that's an indicator, often a buy signal. And we're going to start to see foreclosures in hotels. So it could be the same thing, right?
Yeah, absolutely. And, I've shared the story with you before. In 2008, I was very, very bearish, but we had fallen pretty sharply from October 2007 on the S&P 500 to March of 2008. And I'll never forget, I had like a cycle turn, and I said, well, this is it. The market should turn, this week. And that night, it was a Sunday night, I'll never forget it, Bear Stearns collapsed and was bought by J.P. Morgan for $2 a share. And I told my trading group that night, I said, well, we're going to go in tomorrow morning and we're going to buy the S&P 500. And they looked at me like I was crazy, and it was one of the greatest trades I ever took. The S&P bottomed at 1276 that morning, hit a low, and we got in right at that level and went up over to 1440 before peaking out and making the next bear leg. So, yeah, when you see bankruptcies, that's always a sign. And that happened recently with crude oil. We just had some bankruptcies. We had some people file, and Diamond Offshore was one company. Whiting Petroleum was another company. And usually when you see those bankruptcies, that's a time when you got to step in. It's hard to do. It's not easy to do. This is not an easy business. It's a business that's trying. It's always testing your nerves, especially. But like I always say, the hard trade is usually the best trade. And I don't know why that is, but that seems to be the money makers.
Yeah, and we should mention that the U.S. oil fund's up 5-6% today, which is a pretty significant rise when you consider how bad oil's been. But yeah, it's where, like you say, the best trades are the hardest trades because they really require going against the grain and going against the sentiment and hoping that you're right.
Well, that's why the stock market's going up right now, because nobody believes this, right? You have people walking around with masks right now. I actually saw a person, and this is God honest truth, walking around with an air tank, like a scuba tank.
Really?
I just couldn't believe what I saw. Tried to get my camera out on my phone, and then the guy drove off. But I don't even, I'm a former scuba diver. I mean, those tanks got to weigh, 50 pounds, 60 pounds on your back. That's heavy stuff. So, I mean, they got people in a frenzy. And when I see that, I'm always going contra to what everybody else is doing. I want to just do the actual opposite. If everybody's on one side of the boat, you got to lean on the other side. And that's really the bottom line.
Yeah, that's so true. And it's like that in any market, real estate, all sorts of different things. You really got to look and see what the other side of the trade is, because that's probably going to be the right one. And are there any other sectors that we should be taking a look at now, Nick?
Well, the one sector that I don't want really a whole lot of involvement in right now is technology because it's run up too fast. So, today we have Google up, obviously, but yesterday you could see tech stocks got hit a bit. And what I would avoid right now is the tech stocks that have had big runs with coronavirus. So all of those video conferencing stocks, anything in that group, I would kind of avoid right now. The Teladocs, TDOC was, a great runner. It's a very strong name, but I would avoid that at all costs right now. I would not get involved in that. So I think everything else, all the areas that have been hit are potential buying areas. All the areas that have had runs with the COVID-19 scare, I would avoid them at the moment. So again, I go through this every night in my nightly reports, and I try to break it down for all the members of what I'm looking at, what we're going to get involved in. And, again, technology stocks, I think you got to pick them selectively. You can't just go into, these tech names that have run up. And I'll give you a great example of that was Netflix. Netflix ran up into its earnings announcement. It was all you heard was everybody's going to stay home and binge watch TV. Well, I don't even watch television. So for me, that's not true. But for maybe part of America, it is. But the stock ran up to $449 on the 16th. Now it's trading at, $410, and actually this morning was even below $400. So, just understand those things that have had big runs, now you want to see them pull back, and, you'll be able to get back in them in due time. But right now, I would stay away from that. Other areas, some energy stocks, believe it or not, for the first time, look really, really good on the chart. So, I own BP calls. I love that. I think the pattern looks sensational there. Exxon is moving up. Chevron is moving up. Conoco. So, these stocks got a little bit more upside to go. So there's select energy plays out there. There's select retail stocks out there. Best Buy is having a really good day today. So, again, now that one's a little bit too high on the chart for me. But, you just let these things give you the pattern, and then you get involved in them. Don't chase stocks, though, that are going parabolic.
All right. Yeah, that don't chase a falling knife, as it were. And so the BP calls, how far are you out on them?
Right now, I'm a little bit out of the money, but the pattern on the chart, I have the option all the way out till October, but the pattern on the chart is really, really nice. And again, those are the kind of patterns I like, when you just see the stock is well off the lows, never went down with the crude market, and it's just basing at $25. That's what you want to see. This thing should get to $30.
So basing it at 25, and you think it'll hit 30. Interesting.
Yeah.
All right. Well, we'll call it a day at that. Anyway, you want to go over to inthemoneystocks.com, take a look at Nick's record, take a look at the information there, and see if it's for you. You can also follow Nick on Twitter at ITMS. That's ITMS. And write us. Let us know what you think. KL@kerrylutz.com. That's the proper email address. And Nick, we will catch up with you tomorrow and see what's happening.
Yeah, and Kerry, before we leave, they could also follow me at Nick Santiago 01 at Twitter. That's my personal Twitter feed. And they'll get all my personal comments right there as well.
Excellent. All right, Nick, we'll talk to you tomorrow.
Thank you.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.